Welcome to episode 27 of the 5-Minute Investor Podcast, where Stockhouse columnists Jonathan Brown and me, Trevor Abbas, each deliver a 2.5-minute stock profile related to recent news stories with investment implications. This week, we're talking about solid dividend-paying stocks with the potential to help investors weather a rocky economy, including tariff pressures and interest rate uncertainty. John, which stock have you identified with a strong case for reliable income?
Trevor, Exchange Income Corporation, EIF on the TSX, is out to deliver stability in a market clouded by interest rate uncertainty and economic jitters. With a market cap of just under 2 billion Canadian, EIF may not be a household name, but its performance and consistency make it a standout in the Canadian dividend landscape. EIF operates in two sectors, aviation services and manufacturing, with a business model built around acquiring and operating niche companies that generate predictable cash flow. From servicing remote northern communities to producing high-precision components, EIF's diversified portfolio helps insulate it from sector-specific downturns. Now, what truly sets EIF apart is its monthly dividend, like we're talking about, currently yielding around 3.5% or 22 cents for the month of August. For investors seeking some regular income, this cadence is a welcome alternative to the typical quarterly payout. Recent developments show its momentum, too. EIF posted record revenue and net income in Q2 2025, completed its largest aviation acquisition to date, and secured a long-term government contract to provide air services to remote regions. EIF stock on the TSX has traded around 70 cents a share since mid-August and has risen more than 20% since the year began, up 42% since this time last year. For those out building a portfolio of dependable dividend payers, EIF can offer a compelling mix of stability, growth, and monthly income. Let's call this a rare trifecta in today's market. Trevor, while EIF may be the quiet achiever, savvy investors might also want to keep an eye on another small-cap healthcare company that's also making waves in the dividend space.
That's right, John. My dividend-paying stock, Medical Facilities, market capitalization 276 million Canadian, tracks a portfolio of surgical centers in the United States, including controlling interests in 3 specialty surgical hospitals in Arkansas, Oklahoma, and South Dakota, as well as an ambulatory surgery center in California with a focus on mostly orthopedic and neurosurgical procedures. The company's revenue, derived primarily from private insurance and Medicare and Medicaid, grew steadily from US $363 million in 2020 to $445 million in 2023, decreasing to $331 million in 2024 following a strategic asset sale. Net income grew exponentially over the period from $8.81 million to $73.49 million respectively, supported by controlled short-term debt and decreasing long-term debt, substantiating management's ability to turn an increasingly efficient profit. Backed by a U.S. senior population expected to grow into the next decade, as well as $49 million in cash as of Q2 2025, Medical Facilities is focused squarely on enhancing shareholder returns through improved services and share buybacks, having repurchased 10.7 million shares valued at $107 million since September 2022, with only 18.6 million shares outstanding to date. When we tie it all together with the company's leadership team, including a seasoned CEO with an accounting and M&A background, and a CFO with substantial healthcare experience, there's a strong case for conviction in Medical Facilities continuing to foster its high patient experience ratings, print cash, and create shareholder value moving forward. The company's operational health and prospective future bode well for its quarterly dividend, which has been stable between 7 cents Canadian and just over 9 cents since 2011, and accounts for a 2.4% yield at a payout ratio of only 32.4% as of Q2 2025. With Medical Facilities stock having added more than 200% since 2020, last trading at $14.74, while remaining well below its pre-COVID high of $23.11 in 2016, the momentum behind this essential services provider feels far from over. As always, You can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. Thanks for listening, and we'll see you on Monday. This podcast has been prepared as part of a partnership with Exchange Income Corp and Medical Facilities Corp and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.